What's the difference between mortgage insurance and life insurance? Today we have insurance broker Adam Jung to explain the difference. Welcome back, it's Gary Wong from GaryWongRealty.com. I'm so excited today to have a special guest. We have Adam Jung, one of Canada's most well-known mortgage insurance specialists, here with me today to answer the top 5 most pressing questions that people ask me about mortgage insurance versus life insurance. So stick around to the end and we'll handle those questions and much, much more. So Adam, welcome to the show. I know you're really busy and traveling around in the country. We're so happy and glad to have you here. One of the most pressing questions the viewers want to know is what's the difference between mortgage insurance and private life insurance?
Thank you for having me. It's definitely been a busy month, going all over the place, like Vancouver Island and Victoria. Gambia, I was in there for a wedding, and the Sunshine Coast where I grew up. Exactly what you were talking about with the mortgage insurance, private life insurance thing. There's a lot of things that people don't know about what they're purchasing, especially through the bank or their lending institution.
So what are those key things then?
Some of the key things I think a lot of individuals don't realize is that, number one, don't even realize that they purchase life insurance. So the bank or lending institution might call it mortgage insurance. Really, it is life insurance, and it's there to cover in case of you or your spouse is passing, that mortgage is paid off. So the big difference between something that you would own personally and what the bank is offering is that it's really there, the bank product's there for the bank's best interest. So it's there to pay off that mortgage. And that's what it should do too, personally. But personally, you get to choose your beneficiary. With the bank product, it's the bank. Or the lending institution, so if it's your specific company that your mortgage broker has chosen, same thing. So with that personal product, you can decide that it goes to your wife or your kids. It doesn't necessarily have to go to pay off that mortgage.
Okay, Adam, I'm a little bit confused. What is the main difference between life insurance and mortgage insurance?
Well, the main difference is, I think, for the consumer to know is the fact that with the bank product or lending institution product, which they call mortgage insurance, is essentially life insurance. But a lot of consumers don't even realize that what they're signing up for when they're going through the application. So for one, when you're going in there, you get your mortgage done. It's your first mortgage. They're going to maybe pass this application over you, saying, "Here, do you want life insurance in case one of you or your spouse were to pass away? And here's a couple of questions we want to ask to make sure that you qualify." Right? Most people might say, "Oh no, we don't need it." Some people will go through that and just kind of skim through the answers in the questionnaire, but they don't really fully go through it and understand what they're signing up for or what type of product they're getting.
So in other words, Adam, private life insurance is just better than the bank insurance.
Yeah, if you really simplify it, I would say so. I mean, having some sort of life insurance, even if it is your mortgage insurance product, it's still better than nothing.
It's just more customized.
Absolutely.
I see. And is it like significantly more expensive, or is...
Actually, the price is not the biggest difference between the two. Actually, the prices are going to be
pretty similar.
Absolutely.
But the bank is just the budget version of it.
Yeah, it's just a little more stripped down. You have different things that one of the big key differences I think is important, maybe a lot of the consumers don't, is that with underwriting for both applications, the bank product's a lot different. Like I was saying with the questionnaire, it's really narrowed down to just a couple of questions, but they're very broad in nature. So there might be a paragraph long of, have you been diagnosed, tested for, taken medication for this? And someone that's not really that observant, who has gone or have gone through a life insurance application before, they look at something like that and it's just, I don't think so, and then they just kind of check it off. The difference between that is with a really thorough life insurance application, you're working with someone like me who's a broker and has experience working with different types of claims. You're going to get narrowed down to like one specific question, like, have you ever been diagnosed with cancer? It's very specific.
So at the end of the day, when it comes to claiming your insurance, if you only answered a couple questions in the bank application, it's less likely that you would get your coverage.
Well, that is one worrisome part, is that when you are going through the application, and it's this passed along there as part of that mortgage process, it's not really talked about. It's kind of rushed through. When really that life insurance application is a lot more complicated than people think.
Okay.
With the underwriting, with your private insurance policy, we're going to make sure we go through all the proper steps and make sure you understand those questions.
Okay.
Because you don't want to have a point down the road where when they have to pay out a claim, that they have to go back and find out a bunch of tests or results that weren't brought forth in the first application. So someone that's going through the application process with me, for example, we're going to make sure once you got that contract, there's no way that can be canceled or can get out of a claim.
Okay, good. That makes sense.
Yeah. I'll bring up a number for the audience, and I'll tell you a little bit more about it later. But 67. And I'll tell
67.
I'll tell you the importance of that a little later on.
67. Is that 67 claims per month, or is that 67 unpaid claims per month, or can you guys guess what it is?
67. Well, maybe I should give some background to that. It's not just me that's part of Karl Jung Financial Services, also my father.
Okay.
And he's been in the industry for almost 37 years, and I've been in the industry for 4 years. So over that period of time, I mean, he's probably sold thousands of life insurance policies.
Okay.
And over that course of time, we've had 67 death claims.
Wow. Did you guys get that?
And out of those 67 death claims, can you guess the number that haven't been paid out?
Let's say maybe 10%, like 6?
0.
Oh, all of them have been paid out.
All have been paid out.
Amazing.
So one of the big worries for people that are going through a mortgage insurance application is the fact that they do a lot of their underwriting. So underwriting is the process for when you get approved for insurance. So that might involve a nurse coming and doing urine or blood work or filling out a questionnaire with you. Or getting doctor's reports or more thorough investigations. With the mortgage insurance product, it's done at time of claim. Why that's significant is because at time of claim, they're going to go back, review all that information, and they might decide, oh, you said you weren't a smoker, but according to your doctor, 2 years or around that time that you applied for the insurance application and did his annual checkup, you said you did. You said you did smoke cigarettes. So that can constitute as fraud. And fraud is the number one reason why insurance claims get denied.
Wow, Adam. So you're saying that people can get their death claims denied?
It happens, absolutely. And I can pinpoint to an investigation done by CBC called mortgage insurance. So they have a video readily available on YouTube if you want to check it out. And if you ever have any of your clients that want to not just take my word for it, but want to look up, investigate themselves, there's a great video on it. But to narrow it down more to what I mean by fraud and what constitutes fraud, it's knowingly leaving out information on your application or telling an answer that you know is not true. So how they can kind of figure that out, like I said, is going to be based on around that time of when you...
So if they get their insurance at the bank, they have a simple questionnaire, leaves out a lot of details.
Yeah.
It sounds like to me it's better to go through, a professional who has a custom tailored questionnaire, detailed, so nothing gets left out.
Absolutely.
So is that the most important thing they need to know to avoid death insurance from claims from being paid out?
Well, yeah, and there's also been cases of people forgetting to get the new mortgage insurance product when they changed lending institutions. So now they moved their mortgage from CIBC to Scotiabank. And they said, oh no, my husband had mortgage insurance with CIBC. So this didn't happen to me, but this happened with a mortgage broker I spoke with.
Okay.
And he says one of his clients thought they had mortgage insurance still, but it was only good for that specific mortgage.
Oh.
So once they changed carriers, they thought they still had coverage, but they really had to reapply again.
So it sounds like a lot of hassle.
It can be, yeah. There's a lot of paperwork. If you're just constantly switching mortgages, which some people do, that's a lot of different applications to go through. And there might be a point in time where you're no longer in good health, and you might not even be able to answer yes or no to one of these questions asked on the application.
So Adam, let me get this straight. So what you're telling me is that in order to avoid these pitfalls, the people should just talk to a mortgage insurance professional like you.
Absolutely. I couldn't agree more. And for a lot of people purchasing that bank mortgage insurance contract, people that are selling it aren't even necessarily licensed to sell life insurance.
Oh, really?
Did you know that in Canada is one of the only places left in the world where someone that's not licensed to sell a life insurance type product like that can do so? Anywhere else in the world, there's no such thing as a mortgage insurance product. You have to be licensed. Like I have a specific life and accident and sickness license to sell life insurance, disability insurance, and critical illness insurance. And I think that's really important because, like I said, with that application process, there's a lot of wording in those contracts, and you want someone walking you through that process, understanding what does this question actually mean. What should I be telling my doctor when the nurse comes? What should I be bringing to that interview with the nurse?
So you're telling me that there are some people selling life insurance out there who are not licensed.
Well, the mortgage insurance product
okay.
You don't need a life insurance license to
Okay.
sell the mortgage insurance product. So that person at the bank or your mortgage broker, for example, I think the rules have changed considerably. I don't think many mortgage brokers really sell the mortgage insurance product, and that's happened over the past year. Before that, a lot of the mortgage brokers I talked to are saying, I don't really feel that comfortable selling it. I don't really even sell it that much because I just don't know it.
Yeah.
And would you want to sell something you don't know?
Definitely.
But the one side of the coin for them is that they're making an extra buck off of selling it. They feel like some clients that don't have any coverage, at least they have something. But a lot of clients that do end up getting the mortgage insurance product, who should be talking to an insurance broker, are just content with whatever they have there.
So what should they be doing?
Well, they could talk to me, but obviously there's a lot of different options out there. I think going with an insurance broker is really important because you're going to be able to get different quotes from the plethora of companies out there, so you don't have to go with one specific carrier. So someone like who would work for Sun Life, for example, only selling Sun Life products. Or Freedom 55 is another one of those agencies, London Life, that they sell a very limited amount of products. So someone like me, I have 9 different companies I can go to. And those are the biggest companies in Canada.
So Adam, any absolutely key points that the viewers must know before making a decision?
Sure. I touched on it a little bit at the beginning of the video. I think another really important thing to consider when choosing the type of insurance coverage you want is going to be the type of product. So with a private insurance contract, you're going to set the term of the contract. So you're going to say, I want a term 10 or term 20 or term 30, or you might need something more permanent in nature. A lot of people that buy like whole life or universal life contracts that go the entirety of your lifespan. And that's why it's called whole life. It's there for your whole life. And some of these contracts might have cash values. Some of them just might be pure insurance coverage. And some of them might have different features you can add on to it. So like things like critical illness insurance or different, like you can add your children on, your spouse, or have like a multi-life policy. Those are the only kind of things that you can talk about with your broker to kind of design something more custom to you. But with the mortgage insurance product, like I said, it's going to be on the one person in the household. You might get 2 of these, and it's going to be specifically for to cover the mortgage. But if you're paying, say, its premium ends up costing you $50 a month, and that $50 a month is what you're paying over the course of time that you're still paying that mortgage insurance, that mortgage is going to be going down in size. So 15 years in, what you originally purchased for $500,000 of insurance benefit is now only going to be maybe $200,000 of insurance benefit, but you're still paying $50 a month when you first got the contract. So with a term product or a permanent insurance product, you've locked in that rate for 10 years, 20 years, 30 years, or your whole life. And that rate's not going to change until that renewal at 10 or 20.
Wow, I had no clue.
That's why I'm here.
So Adam, that's a lot of information and for the viewers to digest, even for me. So is there any sort of checklist or step-by-step form where people can find out more information about this?
Well, I have an article on LinkedIn about this exact subject. I mean, this article we've been using from our website for the past 12 years. So it's something we've discussed with a lot of mortgage brokers, realtors, clients alike. And then on top of that video I mentioned earlier about the CBC video about mortgage insurance. It's called CBC Marketplace. So I'll post a link on that.
Okay.
I'll post a link to my LinkedIn, so I have articles on there, and also my website, which we have a blog. So.
Okay, great. So we'll put it in the description below. As you know, this is the Everything Real Estate channel. Whether you're buying, selling, investing, or maybe you work in the real estate industry, we are the experts. So post us a comment, ask us a question. You may be featured in the next video. Subscribe, comment below, and I'll see you in the next video.